Yet again, another IPO opens for subscription, which goes by the name J&K India Limited. In this video, we will discuss the IPO details of J&K India, the business model and the industry it operates in, followed by the financials of the company, peer analysis and lastly the valuation. First up, let's understand the business model of J&K India. Incorporated in 2010, J&K India manufactures critical heating equipment such as process-fired heaters, reformers and cracking furnaces for use in three main industries: the oil and gas, petrochemicals and the fertilizer industry. Having capabilities in thermal designing, engineering, manufacturing, installing and so on, they cater to both domestic and overseas clients. Additionally, the company has a strong domestic presence, serving 17 clients in India and 7 clients overseas. A few of the domestic customers include Indian Oil Corporation Limited, Tata Projects Limited, and overseas customers include a leading European EPC company, oil and gas company in Oman, and so on and so forth. In fact, for fiscal year 23, about 69% of the revenue comes from the sale of products and services in the overseas market, meaning about 69% is export, while the remaining 30% of the income comes from the domestic market. Now let's look at the IPO details. The IPO opens for subscription on April 23rd and closes on April 25th. It has fixed the price band at 395 to 415 per share. So for a retail investor, the minimum lot size would be 36 shares, translating to a minimum investment of rupees 14,940 rupees. J&K India plans to raise about 649 crores from the public, out of which 54% of the issue would be an offer for sale, which means the existing promoters and shareholders are selling off shares, while the rest of the issue will be a fresh issue which the company would utilize for its business. The IPO has reserved 35% for retail investors. So what are the objectives of the issue? The primary reasons for the IPO are to raise funds towards working capital requirements, and second is for general corporate purposes. So what about market opportunity? Fueled by a growing population and economic development, India's demand for oil, petrochemicals and fertilizers is expected to surge in the coming years. As the world's third largest oil consumer, India's oil demand is projected to double by 2045, driven by transportation needs and industrial feedstock requirements. Similarly, the petrochemical sector anticipates significant growth due to rising disposable incomes and the increasing use of these materials across various industries. With agriculture employing a vast majority of the population, the need to improve yields remains crucial. Government initiatives promote irrigation, technology adoption, and fertilizers used to enhance food security. This combined growth trajectory across refineries, petrochemicals, and fertilizers translates to substantial demand for heating equipment in India, estimated at 45,000 million annually between 2024 and 2029. Petrochemicals are expected to be the largest consumer, followed by refineries and minimal contribution from the fertilizer sector. When looked at segment-wise, cracking furnaces will be the most in-demand equipment type, followed by low capex heaters, high capex heaters and reformers. Now coming to the financials. J&K's revenue from operations increased consistently at a CAGR of 72% to 407.3 crores in fiscal year 23 over the last 3 years. Even the EBITDA margins came in at 18% for the last 3 years, showing operational efficiency, while PAT margins were healthy at around the 12% mark for the same period. When looked at the bottom line, the profitability of J&K India grew to 46.3 crores in fiscal year 23, growing at a CAGR of 68% over those years. What's even more impressive is that in the first 9 months of fiscal year 24, the profitability has almost reached the level it reached for the full fiscal year of 2023. When looked at the return ratios, the return on capital employed was at an impressive 57%, while the return on equity was 47% for fiscal year 23, showing how efficiently the company was generating returns from the capital employed into the business. Another important metric to note is that the order book, which again has seen a consistent rise over the years. Now coming to the peer in comparison and valuation. In the Indian heating equipment market, J&K India and Thermax are the most prominent and comparable players. Bharat Heavy Electricals Limited is also a player, however, its revenue from heating equipment is comparatively lower compared to its other flagship businesses. Regarding valuation, with a share price of 415 per share and a basic EPS of 9.51 rupees, this sets the company's price to earnings ratio at 43.6x. To conclude, let's finish off with the strengths and weaknesses. The process-fired heaters and cracking furnaces market is expected to witness significant growth due to rising demand from the oil and gas and petrochemicals industries. Second is J&K Global holds a 16% market share globally and provides customers to J&K India. Lastly, J&K India enjoys a sizable market share in an industry with high entry barriers. New entrants find it difficult to scale up due to the stringent quality norms and high switching costs. Now coming to weaknesses, as of 9 months ending December 2023, the company derived the majority of its revenue from the oil and gas industry. Second is, although the company has received many orders in the past, it may not be indicative of future orders. They face strict timelines in order wins, and any delays would expose them to time and cost overruns affecting revenues, cash flows and financial conditions. Having said that, this is me, Ralston, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment related documents carefully. Visit www.researchandranking.com